JD.com, one of the largest e-commerce companies in the world, just reported Q3 earnings yesterday, and the stock actually declined about 5% after initially surging about 13% off the backs of the Alibaba earnings results, who is actually their main competitor. This now takes us to a market cap of $82 billion with an undefined PE ratio, which we will discuss in just a little bit. But as value investors, we have to ask ourselves if now that we've seen such a massive decline in Chinese stocks as a whole, whether or not there are any buying opportunities in oversold markets like they are in China and with JD, now that at least the Hang Seng index is now down about 50% since the 2021 highs. Make sure to stick around to the end of the video because we'll be answering all those questions and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today, we will be analyzing JD's business and earnings results, where we'll take a deep dive into the financials and really the business as a whole. And by the end of the video, we'll be making an analysis on the business using our intrinsic value calculator to see where the buying opportunities are for JD.com. And if you do enjoy these types of videos, make sure to subscribe as it really helps out the channel. And always make sure to comment your video recommendations in the comment box below so we know what videos and what businesses to post on. With all that out of the way, let's jump into the analysis. All right, and we're reporting on JD.com's Q3 earnings, and let's just start with what this business is all about. As I mentioned earlier, it's one of the largest e-commerce companies, and that's why their main revenue segment here comes from JD Retail, right? Where they just expressed about a 7% increase year over year. They also host JD Logistics, another business of theirs, that had a 39% increase in revenues year over year. They also host Data and the Data Group, as well as other new businesses that are a very small portion of their business, as you can see here. And we will get into all the details on those businesses in just a little bit. First, I wanted to show you about their operating income. We can see a nice increase here as well, at least in renminbi billions. Same thing with their JD Logistics business. This went from a negative figure last year to now being just slightly positive this year. Again, we will touch on all that and as well with the new businesses and data as well. And if we just take a quick look at their logistics network, we can see here that across the nation, they have about 1,500 warehouses with over 280,000 delivery personnel across almost all districts and counties in China. So massive business. Okay, if we take a look at their business metrics, we can see they're now up to 588 million annual active customer accounts. That is over half a billion users annually. Huge business here. It takes them about 31 days to turn over their inventory. And with all this business, it allows them to produce about $26 billion in renminbi, that is, in free cash flow. We will talk on that in just a little bit. First, if we do a quick financial breakdown, we have net revenues here for this quarter, at least 243 billion renminbi. Deduct our cost of revenues. These are pretty lofty, especially once we do a comparison to the other e-commerce businesses towards the end of the video. And then once we deduct for fulfillment, marketing, SG&A, research development, etc., we're left with income from operating activities of let's just call it 10 billion renminbi. Now, here's what I'm alluding to here is their margins. If we take a look at this section of their financial data, you can see their margins are super thin. We're talking about 4% in terms of operating margin. Net margin is down to 2%. I mean, you will always struggle with profitability if you can only profit $1 off of a $100 product. And that's effectively how this business runs, with 4% operating margin here. But if we do take a look at their growth overall, we can see this business is translating well, especially over the last few years since 2016 to now 2020. They've almost 4x their revenues with a 30% CAGR, majority of those revenues coming from their product revenues, of course, but they are growing their service revenues. We're gonna need to see those grow even more so that they can really improve their margins. And if we just take a quick look at their third quarter highlights, we can see an 11% increase in revenues year over year. Income from operating this business was about 1.2 billion for this quarter, US dollars at least. Over the last 12 months, they've been able to produce about $6.4 billion in operating cash flow. And they increased their annual active accounts by 6.5%. Decent growth across the board here. Now let's take a look at their JD Retail business. We can see they launched the first Apple authorized offline store, further expanding their collaboration. They're also now partnered up with LVMH. If you're not aware, this is Moet Hennessy Louis Vuitton's business, and they're now starting their own flagship store on JD.com as well. They've also partnered up with some other luxury brands here, as well as Lululemon. So they're really progressing the business, getting more partnerships and getting more products on their platform. Great to see, as they definitely are looking to expand their margins as well. All right, and all of that leads us to our income statement here. So if we look at this from a US perspective, JD Retail brings in about $29 billion, JD Logistics $5 billion, and then Data and new businesses, They bring in about $1 billion. And if we add all that together and deduct for our intersegment, we're left with $34 billion in revenues for this quarter. And then, as we mentioned, once we deduct for our operating expenses and the cost of running JD.com, yeah, we're left with $1.2 billion in terms of operating income. So they have huge costs of revenues here at $29 billion just for this quarter on the $34 billion in revenues. I mean, if they can really cut these costs down, this business is really going to expand, especially on the bottom line here, because those costs are really eating up an exorbitant amount of the revenues. And then when we look at this from a balance sheet perspective, we have about $11 billion of cash sitting on the balance sheet, $1 billion of restricted cash, and then another $18 billion of investments. So let's just round up and say we're at about $30 billion of cash on the 2.5 and 2.5, so $5 billion of debt. A very nice liquidity position here for JD.com. Let's call it a net cash position of about $25 billion US. And then if we look at this from a free cash flow perspective, yeah, for this quarter, at least $329 million US in free cash flow. All right, so that leads us to our competitor analysis section of the video. We have JD.com right now with about $144 billion in revenues. If we compare that to their competitors of Alibaba, they actually produce more revenues than Alibaba. But then I also have on here eBay as well, only $9 billion of revenue, and Etsy as well as US competitors to JD.com with only $2 billion for Etsy as well. Okay, we can really see the disparity here on these businesses. If we look at this from a gross profit margin perspective, again, we have very thin margins here for JD.com, only 7%. So Alibaba, which really goes to show how much of an impact this has on JD's business, because if these gross margins were anywhere comparable to eBay's or Etsy's, they would have massive operating income, because that's the next thing we're going to look at when it comes to their operating income here. With the thin margins that they do have, yeah, it's really, really low, only about $2 billion in operating income, at least for last year. I think this year they're going to come in around that $3 billion mark, comparable with eBay, more than Etsy. But if we look at this from Alibaba, yeah, because their margins are that much better, we can see how, at least from an operating income perspective, they're able to produce a lot more than the rest of the competitors here. Finally, that leads us to our market cap, which is going to show us how expensive these stocks are. JD.com sitting at about $87 billion in market cap, less than half of what Alibaba is doing, but almost 4 times the size of eBay. And Etsy only has about $14 billion in market cap. So with all that being said, if we assume that JD.com can come in and around that $1.8 to $2.5 billion price range in terms of operating income, and if we require a 10% return, they do not currently pay a dividend. If they can actually start to grow at around 15% off of a massive rebound in the Chinese economy, again, we mentioned in the Alibaba video that they are still going through a lot of lockdowns. You know, consumer spending has definitely tightened up a bit. So if we expect a rebound on that front to get us to about 15% growth for the next few years, then that drops down to about 8% for the 5 to 10 years after that. On a 40 PE, the stock should be worth about $70 per share. Right now, we're sitting at about $56 per share. So some nice upside, at least from those levels there. Now, we already saw they do have about a 30% revenue CAGR, and that is all while they're still fighting through a pandemic over in China, again, mentioning those lockdowns. So if we expect the Chinese economy to really boom, especially being down 50% as we saw already, and they can grow at about 25% for the first 5 years, that drops down to, let's just call it 17% for the 5 years after that. On a 45 PE, the stock would explode to 161. That's about a 3x from where they are right now. Now, in the very worst case scenario where their margins stay the same, they're not able to grow the business like they have in the past, things like Alibaba or Amazon, Etsy, etc. are all taking market share from JD.com. The business only grows at, let's just call it 3% going forward for the first 5 years. That stays constant at 0% for the 5 to 10 years after that. On a 30 PE, the stock would only be worth about $21 per share, basically half of what it is right now. And again, that is in the very worst case scenario. It's very unlikely as well. They do have quite a large position of cash sitting on the balance sheet, so you have to keep that in mind, as I like to deduct that from the market cap to give me a fair value estimate. But overall, that is the analysis for JD.com. Do you think that we're going to be able to grow the way we were pre-2020, you know, before the crash where we grew from 2019 to 2021 450%? Or is the growth over, and are we going to continue to see slowdowns, at least in the stock, going forward? In my eyes, I'm leaning towards a rebound in the Chinese economy, which is really going to boost this stock up. But with the geopolitical concerns, that's always something you have to take into consideration when it comes to investing abroad. Like I said, that's my analysis for this video. If you've enjoyed it to this point, make sure to like and subscribe, as it really helps out the channel. Make sure to also comment your thoughts in the comment section below. And with that, I'll catch you on the next one.